The new gold rush, the price of gold reaching heights it has never seen.
With rising global economic uncertainty, we're being advised there could be a better place to store your cash than in the bank.
When markets get shaky, people often turn to it to keep their wealth safe.
For centuries, investors, nations and empires treated gold as the ultimate shield, the one asset that could outlast wars, recessions, even the collapse of entire civilization. But here's a shocking truth most people don't realize. Gold has lost more value in some crises than stocks. Yes, the so-called golden shield may not be as indestructible as many believe. Oh, the sparkle of gold blinding many, but not always your bank account. In 2025, gold has surged to record-breaking levels between $3,500 and $4,000 per ounce, fueled by global tensions, inflation fears, and shaky markets. Headlines scream safe haven, but history whispers a different story. Gold has crashed over 40% in past downturns. In 1980, it soared, then collapsed for nearly 2 decades. Even in the 2010s, it plunged over 30% in just a few years. So here is a big question. Are we investing in a safe haven or a comforting illusion? In this video, we will dive deep into psychology, the historical patterns, and the data that may shatter the myth of gold's immunity. So, do you trust gold as your ultimate shield? Tell me what do you think in the comments below. And before we continue, hit that like button, subscribe and share this video so you won't miss even more global myths exposed. Want to know whether gold is really a safe haven? Watch till the end. For thousands of years, gold hasn't been a metal. It's been a myth, a symbol of security in a world of uncertainty. Its golden reputation didn't appear overnight. It was forged through centuries of crisis. Let's rewind.
In the gold standard era, currencies around the globe were literally backed by gold. It wasn't just valuable, it was the backbone of the global financial system. After World War II, gold became a trust anchor in a world desperate for stability. Then came the 1970s. Oil shocks, double-digit inflation, economic panic. People fled to gold as their lifeboat. Prices skyrocketed more than 500% in less than a decade. Fast forward to 2008. Banks collapsed, markets burned, and gold? It soared again, peaking above $1,900 an ounce, as fear drove people back to what they could hold in their hands. Gold's tangibility creates psychological comfort. Unlike stocks or bonds, you can literally touch it. As economist Bob Trieste put it, gold is a classic safe haven asset, but that's only part of the story.
And that's exactly where the myth begins to crack. So, is this faith in gold still justified in 2025's volatile world? Let's find out. When storms hit the global economy, gold often glitters the brightest. It's the panic button asset, the thing people rush to when everything else starts burning, and history proves it. During inflation spikes, recessions, or even geopolitical shocks, gold has a habit of soaring when trust in paper money fades.
Take 2024-2025. As central banks wrestled with sticky inflation and the Fed pivoted on interest rates, gold didn't just climb. It exploded past $3,800 an ounce. According to HSBC, institutional investors doubled their allocations to gold in just 12 months. That's not a quiet shift, that's a stampede. Why? It's more than numbers, it's emotion. Gold gives a sense of safety. You can't default on a gold bar, but here's the catch. While gold shines in chaos, it doesn't always outperform. In recent market shocks, stocks and bonds rebounded faster, while Bitcoin at times delivered sharper gains. Gold may protect wealth, but it doesn't always grow it.
So the real question is, are investors seeking security or just clinging to a shiny illusion of it? Drop your take in the comments below. Do you trust gold more than other assets when everything starts to shake? Or which asset do you trust the most? For decades, gold's power rested on one core belief. When markets fall, gold rises. But new evidence shows that this shield is cracking. A landmark University of Stirling study analyzing 37 years of data uncovered a dramatic shift.
Before 2005, gold behaved like the perfect hedge, moving opposite to stocks, offering shelter when everything else was sinking. But after 2005, something changed. Instead of moving in opposite directions, gold and stocks began to rise together during crises. The once reliable negative correlation flipped positive. shaking the foundation of gold's safe haven myth. Why? One major factor, ETFs. Since 2004, the explosion of gold exchange-traded funds has transformed gold from a niche crisis hedge into a mainstream financial asset. It now moves in lockstep with broader market flows, losing its traditional counterweight role. As economist David McMillan put it, gold exhibits a similar risk pattern to the S&P 500. In other words, it's becoming just another asset, not the untouchable fortress it once was.
And here is the real twist. In extreme shocks, platinum now statistically outperforms gold as a true safe haven. The golden age of gold's immunity may be quietly fading away. Every market miss eventually hits a wall, and gold is no exception. Its history is not just a timeline of glory, but a cycle of bubbles built on fear, faith, and mass psychology.
Take the 1970s. Oil shocks, runaway inflation, and panic sent gold prices from just $35 an ounce to a stunning $850 by 1980. Then, the crash. Within 2 years, gold lost more than 60% of its value, wiping out fortunes built on the illusion of endless growth. Fast forward to the 2008 financial crisis. Fear returned. Gold soared past $1,100 an ounce by 2011. And then came another brutal correction that erased nearly a third of its value. But this isn't new. In 1869, during the infamous Black Friday gold panic in the US, speculators tried to corner the market. It ended in a spectacular collapse, proving even a safe asset can implode.
According to economic historians Charles Kinderberger and Robert Shiller, bubbles follow a predictable pattern: collective belief, mass buying, mania, crash. Gold's miss amplifies each step. The more people believe it's unshakable, the bigger the shock when it breaks. The glitter may be real, but the foundation isn't always solid. Once upon a time, gold stood apart, a quiet guardian outside the noise of market, but today, gold is no longer an insurance policy against chaos. It's just another asset playing by Wall Street rules.
Look closely. Gold now moves in sync with stocks, reacts instantly to Fed interest rate decisions, and trades through ETFs like any equity. What was once a tangible safe haven has been absorbed into the financial machine. The result? Gold no longer provides the clean hedge it once did. Even central banks, once seen as gold's ultimate defenders, are contributing to this transformation. Their massive gold hoarding is often less about survival, more about hedging against dollar weakness. This further pulls gold deeper into the same global capital flows it was supposed to shield against. And the numbers speak for themselves. Over the last 15 years, the S&P 500 has delivered an annualized return of roughly 12.6%, compared to gold's 6.5%. Yes, gold still plays a role in diversification, but its magic fades when investors over-allocate, expecting protection it no longer guarantees.
Gold has stepped off its pedestal. It's no longer the fortress, just another piece of the board of global finance. When bubbles burst, they don't whisper, they roar. If gold's current frenzy shatters like it did in 1980, 2011, or even 1869, the shockwaves would be massive. Millions of retail investors could see their stored wealth evaporate overnight. Central banks, holding record reserves, would feel pressure ripple through their balance sheets. And once panic selling begins, momentum itself can turn a dip into a full-scale collapse. Because here is the uncomfortable truth. Gold's greatest risk isn't losing its shine, it's that too many people believe it can't. When faith replaces strategy, every bubble grows bigger, and every crash hits harder. But let's be clear, gold isn't the villain, it's simply not the hero many imagine. Gold works best as a hedge, not a lifeboat. A 5–10% allocation can help stabilize portfolios, but making it the foundation of wealth, that's building a fortress on shifting sand. The myth of gold as the ultimate safe haven has survived centuries, but blind faith in any single asset is the real danger. The real question is, when the next gold surge comes, will you see security or a bubble waiting to burst? If you enjoy this deep dive, hit that like button, subscribe and share so you won't miss our upcoming Global Myths Exposed series. The next one's brewing. Stay tuned.